TheoTrade. This is Don Kaufman. It's October 10th, 2018, and you are watching the Theo Night video. Well, today's trading session, volatility absolutely explodes. We're going to start with a look at the SPX. But more importantly, you've got to take a look at the S&P futures, which are still open. We've got about 3 minutes left in the futures marketplace, down over 105 in the S&P futures, which we finally hit a statistically significant level, okay? Over a 3% move, 3.6% move. Nasdaq futures down almost 5%. Now, before I get into any detailed analysis, I'm not going to get into much technicals today. We're going to talk a little bit about volatility. One of the questions you have to have answered right up front: did we get close to any circuit breakers today? Because I'm already getting emails about that. And here are some of the answers for you. Number one, overnight, okay? There is what they term limit down in the futures overnight. Limit down, though, has to be a 5%, again, a 5% move. So if the S&P futures were to trade down 5%, okay, from their effective closing price, we would hit limit down. However, when the cash market opens, it is a 7% limit down. So just to put it in perspective, we are way within the means of a market. I mean, don't get me wrong. The Nasdaq took a shot at it today, but again, about a 5% move during trading session and trading hours. That's after the cash market open. You look for a 7% move to be anywhere near, okay, that strategic level of what we term limit down. Now, let's start to really break down a bit of what happened specifically today. We've been talking about these exact points kind of day in and day out, but the volatility, well, it did it for us today. First, again, is your risk in check? Well, it has to be in a day like this. Next, cruising over to the SPX. You're seeing, okay, ultimately at the cash close today, some of the most tumultuous moves that we've seen since back in early February. Obviously, early February, we hit very, very similar patches of volatility, but today, a little bit different, okay? Why? Today, everything played into it. Okay, and that's one of the biggest, I think, in stark contrast to anything that we've seen in any recent history. Okay, I've been mentioning this ad nauseum. On Monday, I even brought up a specific slide telling you, okay, markets were not functioning correctly. Take a look back at that Monday video, and you will see the discussion that led us to where we're currently at. This is the S&P 100. This is the advanced decline line. We specifically talked about how the S&Ps were down over 20 points with an advanced decline line that actually at one point was positive. We saw some more of the same of that today. Nevertheless, this is what correlation looks like. S&P 100, 100 of the products happen to be effectively down. Statistical arbitrage kicked into high gear today. Whatever you might think about this marketplace, okay, put every thought aside. You're in a vastly different market than you have been in many, many years. And you need to think about that, okay, in terms of, first of all, quantify your risk. One thing I cannot reiterate enough in a marketplace like this, and I got to tell you, there are markets like this. This is what I grew up in. This is what my bread and butter has always been. I am a volatility trader, and volatility is so very back today. This is just a shot across the bow. But one of the things, if you're going to function in this business and you're going to make it, you have to curb risk that's currently on. And I just can't stress that enough. If you can't handle what you currently have on, there never are you going to have the aptitude, the ability, if you will, to put on positions when the real, okay, when those real, like, you know, those trades are going to be out there like grapefruits, okay, hanging, and very few people are capable of taking advantage of the real opportunities. And I just cannot stress that enough. you're going to look right now at your portfolio and you're going to think, oh, this could have hurt. Curb the risk you got. Because I'm going to tell you right now, traders, they're going to come in. They're going to sell those rallies. They're going to sell those rallies like there is no tomorrow. People today that tried to buy the dip figured that out pretty quick. We have a few levels that we want to mention in the S&P futures. But when volatility really hits, people, everything's out the window. Nobody cares about a level. It's every man, woman, and child for themselves. Just to make that point, okay? I think the volume made the point for me. Take a look at the volume inside of the S&P futures. And that's why I'm saying, people, we're just getting rocking here, okay? The volume up to about 3.3 million contracts in this down move. Now, a few levels that I do think that are appropriate to discuss and incredibly important in the days to come. However, markets get wild, put the levels aside. But these levels happen to be, and we crossed through this one like butter today. This is 28.42. Okay, that's 28.42. Down below over here, that's 28.11. If we're going to rebound in the overnight trading session, we're going to rebound right back into this 28.11. It too happens to be a big kind of contention point, a gravity point, if you will. Now, down, okay, a little bit lower on your screen. I don't have another key level until we get all the way into the area. And again, I want to kind of zoom in for a moment in this, okay? I don't have another key level until all the way down until about 27.31. It doesn't mean that we're headed to 27.31. It just takes, umpteen amounts of trades and watching volatility to be able to pick out what we term these gravity points. And I'm telling you, write them down. 27.31, okay? The 28.11, and ultimately, if we break through 28.11, we should have legs all the way back to 28.42. Wouldn't surprise me in the days to come to see some of the volatility kind of emerge around this. By the way, on intraday trade today, I wanted to show you how important this 28.42 is. Stop there on a dime, chattering back and forth at the gravity point, came off the gravity point hard, okay? Stopped on a dime at 28.11, bounced back into it, and it was nothing but sell side activity into today's cash close. Now, in a trading session like this, there's no heroes. Like you're not going to make a fortune in a trading session like this. Unless, of course, that is if you're strategically positioned for it. If you have some of the positions that we currently have on, sit tight. Let it unfold. I don't want to hear like, I got to get out. What? Because the first time you're ever profitable? We have bearish positions in XRT. Let it play out. Who cares if it bounces? We're deep in the money on XRT. XLY. Absolute slaughterhouse in XLY today. Okay? Who cares? We got a risk twist spread. The risk twist spread is widening out. Dramatically widening out in XLY. Lows. This is one of the positions we just placed this. Okay, we just put this thing on the other day. I've been talking about Home Depot and Lowe's ad nauseum. If you ain't got it, you missed it. If you do got it, sit tight. Okay, let the cows pretty much come home inside of Lowe's. Let this thing fall a little bit more. Now, getting to a couple other positions. The financials. Okay, the financials, this has been the linchpin in the marketplace. It's the financials that threw in the proverbial towel and actually really kicked the sell side activity and kicked all of that statistical arbitrage into high gear today. The financials, if you're in them, sit tight. And right now, the financials, you need to be aware, they're going to be coming out with their earnings. What? Friday morning is going to see the likes of like JP Morgan, a few other big banks. Okay, it is Bank Monday, banks on Friday. Banks to the end of this week, there could be a lot more volatility in store, specifically inside of the XLF. Speaking of the XLF, look at the volatility in here, up to 31% with 2 days remaining. I don't know about you, but I like it. Other individual underlyings, we have positions on Boeing. Sit tight. Here's one that I've been taking an absolute beating on. All of that beating is back in one trading session. Last but definitely not least in this list happens to be none other than Caterpillar. Now, Caterpillar, I have sustained bearish positions in Caterpillar since the front of this year. Okay, we are back, so very back, deep in the money on Caterpillar. What a difference one trading session can make. Now, again, this is all about you, your risk. Opportunities, as I said, are going to start to unfold. They're going to start to present themselves. One of them that did present itself today, we happened to sell some premiums specific to the spiders. And we sold that premium all the way out in the December expiration. Okay, the type of position I look for at this time, what? Well, an iron condor. I just wanted the easiest, softest, gentlest way to put you into premium selling. Start small. It's a $5 wide iron condor for right around $1. It's the 300, 305, 260, 255. This is a trade that we put on. I know it has 72 days to expiration. We're not holding it for 72 days. You're only going to have to hold this trade for 30 some odd days, okay, to pull about 50% of the profit out. How do I know that? Just take the trade from December, flip to the what? To the expiration below that. What's the expiration below that? Flip from December to the Nov 16s. Just take your trade, build it, and then flip it to the Nov 16s. Okay? That dollar credit becomes a 60-cent credit. That means, okay, there's only what? Less than 30 days from now, because from 72 days to 37 days, the exact same options, assuming the market doesn't move much, okay, the dollar option becomes worth 60 cents. It's actually a little bit of a trader's trick in there in trying to price options into the future. And if I drop this right to the Nov 12s, the Nov 12s with 33 days, that means if I hold this position for approximately 30 days, I'm going to collect 50% of the premium in that iron condor. Now, again, a tremendous amount to think about in the days to come. This is the time where you really want to tune in. If you have the ability, tune into the archives, okay, of TheoTrade. We just did and kicked off a session today, all right? It's preparing for volatility series, okay? It's a very timely session that is in the TheoTrade archive. Today's session was risks under control. It's about a 45-minute session about controlling your risk. Again, for those of you, your members, go into the archive. It's under the coaching session. Seek it out. We have to get your risks under wrap. We want everybody to be able to take advantage of some of the explosion in this volatility. A few other points to be made. The VVIX today, the volatility index, hit the stratosphere, but stop right there, okay? It hit its stride, okay? We don't need to see a VVIX continuing up. The VVIX is only confirming what we already know. What do we know? Okay, the markets, they're going to see, again, some fairly wild volatility. The next thing I want to talk about, volatility futures. The volatility futures themselves have completely inverted. Forget about the 7-day volatility futures. Forget about the, people get into like, what's the term structure of the VIX? Forget about all of that. The volatility futures, what do they tell you at this point in time? The 42-day volatility, okay, is above the 7-day volatility, is above, okay, the 98-day volatility, is above the 126-day volatility, is above the 160-day. All I'm showing you right now is the volatility curve is completely inverted. And it says risk is prevalent now. The sky is falling more in the next 42 days than it is 160 days out. That is extraordinary because even during some of the most wild movements in volatility, it's rare to see the 42-day exceed 160-day volatility. The curve has completely flipped over. Once again, people, we are in the midst of a much more serious market. Sell the rips, sell volatility. Go in, though, with a very light hand. No reason to step out there and take a dramatic amount of risk. We're now going to get, categorically speaking, okay, substantially greater moves on a day-to-day basis. Substantially greater moves, allocate less. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.